Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today we had as the briefing yesterday suggested, the close was pretty strong and placed the market in a very strong position to the upside. And today we had a gap up opening, immediately probing above Tuesday's high. Now the thing is that probe immediately was rejected and the market came down really harshly into yesterday's profile. It didn't follow through and it didn't get acceptance below the base, let's say, of the late rally from Wednesday. But it was under pressure. You can see here on the continuous chart how the 3000 area, which coincides with the 200 moving average, gave support, and actually that was a pretty good area for whoever wanted a long position, because as you can see, the late rally yesterday originated just below that area, and with the 3000 and the moving average holding the ground to the level denoting change, that was a pretty good place, let's say, to go long. Now, on the daily, you can see how you were before on a balancing range back and forth, but in the last few sessions, the back and forth has concentrated on the upper side. My concern here is that if you probe continuously this 3010, 3015 area, and you do back end and filling, and then you go back again and you get strongly rejected, if you don't get continuation relatively soon above this 3015 area, the chances are that the market, coming from where it's coming, and remember that there are two gaps in place, the market could be getting too long. And if the market gets too long, you cannot go past through, there will be some forced long liquidation, and we can force that rotation back to the 29.75 bottom of the range, and potentially that gap over there. If we look at the market profile, you can see what I was just explaining a minute ago. The high from Tuesday, which, well, effectively you open one tick below that daily excess, and there was a triple high. Immediately we probe high, failed, came down really harshly, and then went straight to the 3000 area and the level denoting change. You can see here the M low right at 98, giving support, and then the market became rotational after that. A couple of points there is that later in the session, when the volatility kicks in, you couldn't reach the highs, and then you made another higher low. That, I mean, it could be that temporarily the market was getting too short, trying to break lower and couldn't, and then you had a little bit of a squeeze at the end. But there's a good balancing and a good acceptance of this area over here. Important to know that this strong tail left on the A period, a big part of it remains, and that's the recent high. So my concern is that if we don't get acceptance quickly above this, the market could be getting too long, as I just said. So focus for tomorrow will be definitely on developing value relative to today's, and this area is the key area to the downside, the 3000 and the weak structure, well, a weak or relatively weak structure that we have here, and you have the moving average also in that area. So if this area gives way, there is a chance that we will probe Wednesday's low. But a lot can happen between like now and tomorrow. We have the overnight session, we have some earnings reports as well, so a lot can happen. The market seems to be accepting here. However, on the larger time frame, we see, yes, the market is pointing up, but I see some signs of some struggle. So let's see what happens tomorrow. Definitely level denoting change if you take that 3000 area, and given the relevance of that level, the market could come down really fast and sharply. So keep an eye on that, manage your risk, and trade well towards the end of the week.